What's up, guys? Welcome back to the trading world. Today we had a massive dump in the market. We're going to be reviewing every little detail about price action and talking about what happened, what trades you could have taken, and what lessons we can learn from today. If you guys like this type of content, definitely consider leaving a like, subscribing, follow me on X, and checking out my completely free Discord. The link to that is in my bio. So, let's talk about it. Why did we dump? Well, first of all, you have to understand what price was doing overnight. So, in London session, which is from 2 a.m. until 5 a.m. Eastern time, so I can pull it up here, you can see what was happening, right? We were creating a market maker sell model. So, let's take a step back. What's a market maker sell model? Well, it's where you push into a higher time frame key level. So in this case, we had a new day opening gap, as you can see here. Check this out. And what happens is, you can see how perfect this is, by the way, is the market curves up into the higher time frame key level and then expands down away from it. This behavior occurs in the market over and over again on all time frames, and look for it. Look for higher time frame gaps, lower time frame movement into it, and then away from it. And this is going to occur on all time frames. Market maker sell model. Remember that. What else happens? We get all the true opens. So if you don't know about true opens, watch my video where I explain them. But it's the but they're important price level time. They're important levels for premium and discount. So here's here's midnight, here's 1:30, and you can see by the time we get to the high of the sell model, time and price are aligned, right? And then what happens? This is really cool. So we form. You guys might know what Wyckoff is. If you don't, this is gonna be a cool. I've never talked about this on my channel, but essentially a Wyckoff formation is gonna be like, when the market, here, let me zoom out for a second. When the market pushes up into, when it pushes up, it forms a high, a higher high, and then another higher high, this lower, and then forms a lower high. This lower high is going to be very sensitive before a very aggressive expansion lower, right? So 1, 2, 3 drives. It's also called like a 3-drive pattern, right? Where you push up once, 2 times, 3 times, and then you'll have a failure swing, and this failure swing is going to be super, super sensitive. And you'll see this occur in the market all the time. And so you can see that happening overnight here, where we get 3 drives. We get 1, 2, 3 drives into the new day opening gap. We form bearish SMT. And then on the 4th drive, what happens? It's a failure swing, and meaning we do not take the initial high, and we perfectly manipulate the 90-minute true open. So now time and price are aligned. All the true opens have been manipulated. We come above these highs, above the 90-minute cycle true open. Boom, SMT into it, and then delivery lower. Another fascinating thing over here is the same thing occurs with this true open. We actually have the 7:30 true open. I don't have a screenshot, but I'm going to go ahead and show you guys real quick, so I think it's cool. We have the 7:30 true open, right? That's the New York session true open. I marked this out with a line. What happened? It helped identify manipulation for New York session. And how did it do that? We had an SMT with this high. So SMTs with true opens guide the market. So when you get SMT with a true open on one side of that true open, it's going to guide the market towards where it wants to go. And you can see that's the case here, right? Boom, SMT with this true open, expansion the opposite direction. Do you see how this is occurring in the market over and over again? Right? SMT with true open, expansion. True open manipulated, expansion. So this is why I put so much emphasis on true opens, because you can see the power of using them with SMTs to show how price gets directed in the market. Okay, so let's talk about some actual trades you could have taken. So I'm not going to lie, I think today was a little bit of a harder type of day, simply because, well, look at what happened. We went straight down. Now, there was a very logical reason for why we went straight down. We had a ton of good draws and liquidity to the downside. Like it was, I literally named this was a steak dinner, because this was literally just an absolute feast for smart money here. You can see we had the FOMC data low. That was the FOMC news event from yesterday. We had Asian session lows right here. We had Monday's overnight gap. It's called the RTH gap. Market wants to go fill those. And then we had perfectly equal lows that were like an hour or two apart, right? And all of these lows lined up, and then boom, expansion lower. Once again, in that into that new day opening gap, and then we get expansion lower. So very, very fascinating stuff. So what kind of trades could you take? Well, like I said, it's kind of hard because where are the real entries? I think one of the main entries, maybe in my opinion, the trade of the day, and I will post this on Twitter. I'm going to start posting trade of the day on Twitter every single day. But I think probably the most realistic entry, even though I did not get it, was this. Yeah, this. I think this was the most realistic entry. I didn't catch it, but I think if I had to redo today, this is what I would do. We had very clearly around market open, so you really have to pay attention to what's going on at market open, right? And sometimes with market open, you do need to drop down to a lower time frame chart, like a 15-second, but it will give you a really good idea of what's actually going on. So check this out. The market consolidates, right? What's this? Accumulation, meaning we're accumulating stop losses above and below. One side of the market gets manipulated. You see that? What happens? Stop losses hit, right? So accumulation, manipulation, stop losses hit. The true opens are all manipulated here, right? You can see the 90-minute true open. We sweep the high above the 90-minute true open, above the 22-minute true open, bearish S&Ts. Then, boom, aggressive displacement lower. 15-second change state delivery retest, or you could also call this a breaker and fair value gap, right? Both of those are kind of like the same thing. Normally this would be called flow state, but there's no higher time frame key level. And then retest of that, and then lower prices. And I think that was probably the most realistic entry. If I was to redo today, I would do that. And you might be wondering, why are you taking a change state without a higher time frame key level? Well, realistically, there usually probably is a higher time frame key level. I just don't see it. But if the AMD is obvious enough, in this case, it's very obvious, right? You can see there's accumulation, manipulation, and then a very obvious change state delivery. You could just go ahead and take that change state delivery because you know that there's obviously AMD, right? But in this case, there actually was a higher time frame, aligned time frame key level. It was this 5-minute down close candle. It's called this 5-minute breaker. So usually there is. So even if you don't see a higher time frame key level, a lot of the time, still take that change state delivery retest if you have conviction, because there might actually be a key level. You might have just missed it. So once again, 5-minute breaker, 15-second change state. With a 5-minute key level, I either align that with a 30-second or a 15-second, and then boom. For the most part. So what other trades were there? Well, there's this trade. This was not a trade I would ever take, but I just want to talk about it. So here's Dodgy on Twitter saying how he predicted this move lower. The reason he was able to is because, well, right at market open, we inverse this gap. Personally, this is not something I would take, just because, I I don't think it's super obvious, but Dodgy liked it, so I wanted to give a little shout out to Dodgy here and talk about his trade. But that was a trade Dodgy took, I guess. It was a 15-minute chart, inversion for value gap, and we had a data low there. So that was, if you guys don't know, taking an inversion for value gap to target a data low is going to be very, very nice. We also had, I think this was also a really, really nice trade. In my opinion, this was also maybe a candidate for trade of the day. So on our way to go fill the next, so we had already taken the data low. The next drawn liquidity after the data low, what was lower? We had the overnight gap, so that was the next target. And what ends up happening is we have a first center for value gap from Tuesday. We come up into it, sweep the high, and then displacement lower, back testing the bottom of this bottom of this down close candle. And in this case, I would use the wick of the change of state delivery. So I kind of mark these out differently, but in this case, I would use the wick of this, and then you can project this out 4 projections, 7 projections, and I think this was a really nice trade. Just a 15-second change of state off the first center for value gap with a sweep of these bodies here. And this is all during the macro. So I really do like this. Once again, overnight gap. That's what this giant dark box is. This is really nice. Or this is going to be wanting to be filled a lot, right? This is going to want to be filled a lot. And then, yeah, just a obvious interaction and rejection of the first center for value gap. If you guys don't know, this is my first strike model that I nicknamed. So to just describe what I've seen in the market happen over and over. And yeah, I did take a loss today, and in all honesty, it was kind of forced. It wasn't super obvious. I think it was okay. I'm on a massive, huge winning streak, and so it's all good. But I do think it was a little forced looking back. The reason I wanted to long is because we took the data low, and we're delivering from that first center for value gap there. It failed, but once again, I'm on a massive win streak, and I kind of need to be humbled today. But yeah, I just don't think this is obvious enough, and obviously against the trend, it's hard to get a random reversal off the data low without when it's a obviously higher time frame bearish structure. So in hindsight, I'm not going to do that again, just because why would I expect a random 15-second inversion to work off the data low when it's expanding so aggressively lower? I think that was a mistake. Anyway, but yeah, I've had a massive, huge, like a really good last 2 weeks. I'm up 17R, or I was up 17R in like 2 weeks, which is insane. Like, I don't know, I'm just super happy. So it's all good with this one loss. And yeah, I guess last thing I'll talk about is this. So this was like a 2022 model with the market maker sell model, displacement below this low, boom. There you go. Fair value gap gets hit. Equilibrium of this leg gets hit. So there's your TGR boot camp type of trade where it's the midpoint of that price leg and then lower. Then we go to Asia low. So yeah, that's it for today's market recap. And I'll see you guys in the next one. Peace out.